So this is a great question, and again, it comes back to some of the conventional wisdom. You're never going to hear me talk about fixed percentages or fixed pips, and a lot of the reason for that is because this pip movement analysis that we're doing right now. So if I am trying to determine what my maximum allowable loss is, I don't know how we have well over 200 people here in this room. Everyone's account size is probably slightly different. Everyone's risk tolerance. And when I say tolerance, I mean psychological tolerance. I know some people can come back from a 50 pip loss, shake it off, they're done. I know some people, a 10 pip loss just completely ruins their confidence. I don't know where you are psychologically with your risk tolerance, what's going to shake you and what's not. Experience usually has a lot to do with that. Okay? I don't know everyone's individual account size. Okay? Every one of us has slightly different expectations of our trading, and every one of us is going to have a slightly different risk tolerance. And I think a lot of times people just try to plug these things into formulas, and I just don't think that works because our minds are not formulaic. You know, I don't think that plugging my account size into the number of contracts I can take per trade makes any sense, because if you're a new trader, a brand new trader, in my opinion, you probably shouldn't be handling multiple contracts. You start off with one, you gain confidence with that, you learn how to handle that, you might move on to two and so forth. So this idea that trading is formulaic in terms of the account position size, your position sizing isn't necessarily something that I think applies to everybody equally. The reason I don't necessarily subscribe to the 1 or 2% as a stop loss is, again, it doesn't reflect the fact that each pair has different volatility at different times, different support and resistance levels in terms of reflecting the volatility, okay, and different mannerisms all together. Again, compare the Aussie to the pound yen, which I've heard is called the twisted sister. I don't know. That's what I've heard. Okay? So 2% might be an uncle point. 2% might be that maximum allowable loss that you're comfortable with, but it does not necessarily mean it should be your stop loss. To me, a stop loss is your point of validity for the trade. What does that mean? Every trade had a reason that you triggered it. In other words, all that reasoning, all that analysis went valid. It became true, and you took the trade. Think about it for a moment. You took a trade because it was valid. All your criteria was met. What happens when it's not being met anymore? Can we say it's now invalid? When a trade is no longer valid, what price is that? What price does that happen at? That's where I want to put my stop loss, when that trade is no longer valid, not based upon a percentage, certainly not based upon a dollar amount, not based upon a fixed pip. I need to determine what the volatility of the market is based upon the time that I'm actually executing the trade and that it's a live trade. And then I need to understand when the trade is no longer valid. Okay? So I think that that percentage idea, to me, only applies to what you say is an allowable risk as far as the trade being affordable. So if you think 1.5% is an allowable risk, great. That's not your stop loss. That's what determines whether you can afford to take the trade in the first place. Again, that's the way I look at that percentage. It's valuable to have. That's your uncle point, but not your stop loss. Gosh, I hope I've made that clear, because really that's one of my pet peeves, this kind of portfolio management philosophy to risk management. It makes sense on the surface, but the more you start to realize where it came from, it does not make sense for traders. All right? Okay, so I hope everybody's clear on that. Let's go ahead and dissect an individual pair, because I think that's where a lot of this will make a whole lot more sense, and I'll keep going through these questions as well. So let's take a look at that Aussie. We took a look at the Aussie before. Let's break that down into the 24-hour day. What you see in front of you is based on Eastern Standard Time, as you can see up here. All right, and here's your 24-hour trading day. 0 is midnight, 23 is 2300 hours, 11 p.m. Okay? So this is the personality of the Aussie based upon time. I don't know who's ever seen this before, but I gotta be honest with you, this blew my mind. Okay, this absolutely blew my mind. because I had been a subscriber to the auto chartist, the PRS, as you're familiar with, at Interbank FX, and the same people who did the PRS took that same data that was feeding the automated chart pattern system and said, we have all this data, we can actually break this down and give people an idea of how the different pairs move over the hours of the day. So again, yes, Eastern Standard Time, as you can see up here, okay? And midnight, 11 p.m. Aussie US dollar. What are the countries that are involved in the Aussie US dollar? Think about that for a moment. I've got Australia, I've got the US, okay? I wouldn't call the Australian dollar a huge, I mean, and again, this is not any kind of opinion about the country or, anything like that. I've never been to Australia. I think I'm going to go later this year. Would love to go, okay? I'm just talking strictly from a trader's perspective, so don't think I'm passing judgment on any country or anybody. But I wouldn't call the Australian dollar a huge currency internationally. It has its segments, of course, but, it's not the yen. It's not the euro. It's certainly not the US dollar, okay? So who is interested in the Aussie? Well, I would say for the most part that Asian financial center, of course, focusing in on Sydney, okay? When does Sydney open? This goes back to this very simple concept that I discussed at length in Forex on 5. Who's awake? Who cares, right? Who's awake and who cares about the currencies that are being traded in this pair? Obviously Sydney. So if I am trading the Aussie US dollar, it would behoove me to find out when Sydney opens and closes. Now it might sound funny for me to say open and closing. Okay? Obviously we know the Forex is a 24-hour market. But the trading day in terms of financial center is not a 24-hour day. People in Australia are going to go to work, they're going to have lunch, they're going to come home, they're going to have dinner. What are typical work days? 8 a.m. to 5 p.m. No matter where I've traveled in the world, I don't care if it's Seoul, I don't care if it's Calcutta, I don't care if it's New York. We all seem to go 8 to 5, more or less. We start gearing up around 7, 8 a.m. We start winding down around 5, 6 p.m. Okay? So basically, I need to know the people who care the most about what's happening with the Australian dollar. I will tell you, as a commodities trader, which I trade very actively, the Australian dollar has a huge effect on commodities. Okay, so I got to understand where the focus is, because every one of these currencies has a particular focus. So I know that during the Sydney trading hours, and I know then again based upon the U.S. trading hours, and also because the U.S. is going to have the effect of, how the U.S. dollar is affecting, is trading against the Aussie, right? And also that commodities link, because the Aussie dollar is a commodity currency. If you guys don't know what that is, just suffice to say that there are a handful of currencies that are greatly affected or greatly affect the value of certain commodities. For the Aussie, I think it's really the entire commodity sector, but more specifically precious metals. Right now, because precious metals are in such a speculative state, it's not a great link back to the Aussie. It still is effective to look at gold and silver and the value of the Aussie, but I think commodities in general, you'll see a certain correlation to the Aussie US dollar. So let me make my point here about the Aussie as far as who's awake and when. You got to understand the 24-hour clock across different time zones. You got to understand where you are in the world in relation to when Sydney's going to get active and when Sydney's going to close. Sydney's active right now. In fact, take a look at the way the Aussie's moving. Is there a lot of turnover, in other words, trading participation that comes out of Sydney? Well, if you're assuming that our day starts in Sydney here's about 6 p.m., 7 p.m., 18 and 1900 hours, 6 p.m., 7 p.m. is when Sydney gets rolling, it doesn't get all that volatile, does it? So are the Sydney trading hours the active hours, the volatile hours for the Aussie US dollar? Take a look at this chart.